Hi, welcome to holisticinvestment.in. We help individual investors like you to make the right financial and investment decision to reach your financial goals more faster and smarter way. India's rural economy is the heartbeat of the nation, contributing significantly to its growth story. The ICICI Prudential Rural Opportunities Fund aims to harness this potential by investing in sectors that directly benefit from rural demand and development. But is it a suitable investment for you? Let us find out through an in-depth analysis in this video. But before analyzing this fund, let us first understand a few basic details about it. So as an NFO, the opening date of this fund is 9 Jan 2025 and closing date is 23rd Jan 2025. And some of the key features of this fund are: it is an open-ended fund type which belongs to the category of equity thematic. It has Nifty Rural TRI as its benchmark index with an exit load of 1% if you choose to redeem it within 12 months. And there is no entry load, and the minimum investment amount you need to start investing in this fund is 5,000 rupees. And the fund managers for this fund are Mr. Priyanka Khandalwar and Mr. Sankaran Naren. And according to the riskometer, the risk involved in this fund is very high. And if you take a look at the investment objective of this fund, the primary objective is to generate long-term capital appreciation to the investors by investing in equity and equity-related instruments of companies following rural and or allied theme. Now, as we have a basic understanding of this fund, let's move on to analyzing the pros and cons of investing in this fund. Now, let's start with the pros. The advantages are: number one, focus on rural growth potential. This fund strategically invests in companies linked to the rural economy such as agriculture, FMCG and infrastructure. With the government's continuous push for rural development, it provides exposure to an area of the economy poised for growth. Number two, diversified across rural linked sectors. The fund balances its portfolio across various sectors like agrochemicals, rural housing and consumer goods, reducing the risk associated with being overly dependent on a single industry. Number three, long-term growth opportunities. Rising rural incomes, increased consumption and infrastructure development offer significant long-term growth potential, making this fund an attractive option for patient investors. Number four, expert fund management. This fund is managed by ICICI Prudential, a reputed name in the mutual fund industry. So the fund benefits from the expertise of seasoned professionals adept at navigating the complexities of rural focused investment. So these are some of the advantages of investing in this fund. Now let's take a look at the disadvantages, the cons. Number one, thematic concentration risk. Being a thematic fund, it is heavily reliant on the performance of the rural economy. Any downturn in rural demand or policy changes could impact returns significantly. Number two, market volatility. Despite its rural focus, the fund is subject to broader market risk, economic slowdowns or external factors which could influence its performance. Number three, dependence on government policies. Sectors like agriculture and rural infrastructure are closely tied to government initiatives. Any policy reversal or slowdown in implementation could affect the fund's returns negatively. Number four, longer investment horizon needed. So the fund investment may take time to realize the full growth potential. So it requires investors to have a long-term perspective and patience, which could be inconvenient to investors who have a short-term goal. So these are all some of the drawbacks that is present in this fund. Now, what is the final takeaway from our analysis? Is the ICICI Prudential Rural Opportunities Fund worth investing or not? As you can see, this fund provides a unique chance to tap into India's growing rural economy with a diversified investment portfolio and professional management to back it. However, the thematic nature and reliance on rural growth comes with their share of risk. If you are an investor with a long-term horizon and a moderate to high-risk appetite, this fund could be a meaningful addition to your investment portfolio. So it's completely up to you as an investor to decide whether investing in this would be suitable for your investment portfolio or not, based on your financial goals, your risk tolerance, and the time horizon you have to achieve those goals. But our personal opinion would be, if you are a first time investor or even a conservative investor, you could avoid investing in this fund, because this is not a beginner friendly fund to invest in, as it is a thematic fund. To invest in a thematic fund, you need to have a substantial knowledge of the market. But if you're just beginning to invest, it might not be suitable for you. And also, because of the high risk involved on it, if you're a conservative investor who's willing to take low risk, then this fund might not be suitable for you. But if you still want to invest in a thematic fund like this, then you can go for other similar existing thematic funds out there in the market with a track record. As an NFO, it crucially doesn't have a track record. We only have a limited data about this fund. With a track record of at least 7 to 10 years, we will be able to analyze the highs and lows of how this fund has performed in the market cycle, because in 7 to 10 years the market cycle would have gotten completed and you will have a better idea of how this fund has performed and be able to take a calculative risk. But here, as we only have a limited track record, you're going to take only a blind risk. That's why if you're looking for funds to add to your core investment portfolio to achieve your main financial goals, it's better to avoid this fund, because if this fund underperforms, because you do not know how this fund is going to perform and you're just going to take blind risk, then if this fund underperforms later, then it will definitely negatively impact the returns in your main investment portfolio. That's why if you do want to invest in the ICICI Prudential Rural Opportunities Fund now, it's better if you invest it through your satellite portfolio with your surplus money. So here, even there, you can invest it with a minimal investment for experimental basis. And later on, over the years, if you think it's performing well, then you can increase your investment amount according to how you see fit. And also, finally, most importantly, if you do not know when to enter and exit from a thematic fund, especially, definitely avoid investing in a thematic fund like this. And if you think you need professional guidance for your investments, definitely consult with a certified financial planner who will be able to look at the suitability of your investment objective, risk profile, overlap ratio, allocation, and then consider whether investing in this fund will be suitable for you or not.
If you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.